My question as a practitioner, as a former exchange guy, is how do you make efficient trading work? Like, without efficient pricing of your carbon, the carbon trade is not going to work.
Welcome to Asia Climate Finance, your front row seat to the policies, investments, and actors shaping climate business and finance across Asia Pacific. Subscribe now so others find this essential guide to Asia's climate economy, and note the disclaimers at the end. Now over to the host, analyst, investor, and author, Joseph Jacobelli.
Good morning, good afternoon, or good evening, wherever you may be listening from. Welcome to Asia Climate Finance. Today, we get into China's carbon markets and where they're headed. From how emission caps are being tightened to carbon accounting, to what all of this means for companies trying to stay on the right side of the rules, like the EU's carbon border regulations. I caught up in Lisbon with Jeff Huang, CEO of AEX Holdings. He'd flown in for a conference. Jeff has seen this world from the inside, having worked with the people who built the Chicago Climate Exchange and later the Intercontinental Exchange. And he's now one of the key figures connecting international markets with mainland China. If you're watching the green transition in Asia, this one is worth your full attention. One more thing before we start. Carbon markets do come with their own vocabulary, lots of jargon. I put together a plain language glossary for anyone who wants a bit of a cheat sheet, and you'll find it in the transcript. Please do send your comments, ideas, and anything else to the email address at the top of the show notes. It's acfpod@outlook.com, acfpod@outlook.com. Thanks, and enjoy the show. Hi, Jeff. Thank you very much for making it today. I really appreciate your time. So you just came in from Beijing, and you've got a couple of days for the conference, and then you go back. So really, really glad that I caught you. Now, Jeff, we've got your bio in the show notes, so all of your achievements and your background, etc. But if you were to introduce yourself to somebody, how would you describe yourself?
I'm trying to be a bridge. My own background, my association with the Chicago Climate Exchange in the past, with Dr. Richard Sandor, the pioneers and the father of global emission trading, my experience of working with them and subsequently working with the Intercontinental Exchange gave me an opportunity to witness and to work with some of the best pioneers in carbon trading and, frankly, in building new markets and grow new markets. So that hands-on experience gave me the support, the intellectual capacity to eventually try something like what these guys did in the past in the United States and Europe, and to try to work with the stakeholders in Hong Kong, on the mainland, the friends and the colleagues and the partners I worked with over the last 10, 15, 18 years, and really try to see if we can replicate some of these successes in carbon trading, in building efficient new markets,
right,
in building markets that work, period. So those are the things that I've been fortunate to be able to be involved after I left ICE and formed AEX Holding in Hong Kong. The goal is to really build new markets, working with the coalition of people, and then to apply these expertise and these financial market tools to, again, to work with stakeholders, the compliance company, the energy companies, financial firms, the regulators, the educators, the NGOs, to see how we can use market to achieve energy transition and the green economy goals at a lower cost.
So you mentioned your company, a company that you founded and you're the CEO of AEX Holdings. Can you just explain a little bit what AEX is all about, how you created it and the evolution and where you are right now?
AEX Holding is a incubation company with Hong Kong Cyberport. The idea of AEX is to build new markets adopting international trading platform best practices. That could mean the market operator, and by extension, the market operator as it relates to the regulators, the market users, the clients company, the financial trading firms, the banks, brokers, etc. So building markets of functions, basically, a reason for being.
Understood.
And we have been, as you may know, working with Cyberport. We've been trying to conduct simulated trading over the last years of the carbon forwards, including the European carbon allowances, because the CBAM and Maritime EU ETS, one of the things, this conference in Lisbon 4, as well as the Chinese carbon underlies, including the Chinese allowances and the CCER, the voluntary markets. In the future, as the coalition we're building in Hong Kong expand, we'll be able to work and include other energy asset classes like the green methanol, ammonia, or hydrogen. The green energy projects highlighted in the Chinese government 15th five-year plan.
Right. One of the biggest challenges, not just for AEX, but for the carbon markets in general, and we discussed this earlier before we started recording, is about data, about the transparency of data, the availability of data. Could you share your thoughts about that a little bit?
Well, our experience is if you develop the right framework, if you develop the right goals, and you talk to the stakeholders, especially the stakeholder in onshore in PRC, very often we'll be able to work with the stakeholders, with the regulators, with the company within the confine of a developed data framework, so that we will be able to get the data into Hong Kong, process the data, and come up with the desired outcome, the desired results. As you could witness in our AsiaREC registry program, which is also part of the Cyberport incubation process, we're able to work with the China System Grid and work with the media, the company that produced the refrigerator in the last fall. We work with these stakeholders and the generator in Guangdong province to conduct the first hourly matched PPA, harmonizing with the EU CBAM requirements, even before the EU CBAMs published their detailed regulation, the green energy attributes coming over into European markets. So those are the kind of a proven track record of AEX, AsiaREC, the nonprofit NGO we helped found over the last 2 years, to be able to collect these data and process it for the final goal of harmonizing for the supply chain company. When they consume wind and solar energy, the consumption, the standards, and the data will be harmonized in order for these supply chain company to ultimately lower the carbon exposure when the products goes to European markets.
Got it. The two areas I really wanted to pick your brain on, and one is a little bit about what's going on with the Chinese carbon markets, because I think there's a lot of misunderstandings around. There's not as well researched as one would like, or well understood, I should say, as one would like. And then the other one is about Hong Kong, and within that, also what AEX's role is with the China's carbon markets, with the Hong Kong carbon markets. So starting with China, where are we at with the Chinese carbon markets right now?
I think Chinese carbon market, the national ETS, is on the right track. I think the regulator, MEE, has made it very clear as the market develops more above and beyond the power sector, obviously, right? The 10 national ETS started with power sector alone, has launched online trading in July 2021. So now we have kind of hands-on experience over the last 5 years. So MEE is in the process of expanding above and beyond the power sector, a 5 billion ton into the cement, the aluminum, and the steel sectors. So the experts in China are telling me there's going to be an additional 3 billion tons coming into the market. So it's a sizable, and more importantly, as the policymaker has also made it clear that China is transitioning the ETS from an intensity-based cap into an absolute cap. That transition is ongoing. Obviously, Dr. Sandor and other people have been advocating publicly in China about this transition from intensity cap to absolute cap over the last 3, 4, 5 years. Right. So the other main thing to watch is the auction. Right. 2 weeks ago, I had a bit of a lengthy discussion with one of the biggest SOE generation company. And I asked them what is top of mind for you guys coming into the new year, right? The year of fire horse, right? So they said, Jeff, number one priority is we're getting ready for auctioning, right? So now all of a sudden you're starting to talk about, and these frontline compliance company are making detailed preparation for an intensity transition into an absolute cap and making preparation for auctioning. So I'm just saying these two are signposts, right? That potentially will elevate the Chinese ETS from a startup to the level of European best practice, or from a regulatory perspective, right, a market that matures.
See, one of the things that I think is very widely misunderstood, and I don't know if it's the analysts not doing a good job or the journalists not doing a good job or whatever it is, but one of the things I read, for example, is, oh yeah, China has a carbon market, but it's very limited because a lot of the sectors are not included yet, et cetera, et cetera. So they don't know how China operates. They don't understand that, for example, China today has electricity trading, but it took maybe 2 decades before they got there, right? There was a lot of preparation, a lot of trial, a lot of pilot projects, because they're very, very concerned about potentially something going wrong, obviously. So they really want to focus on taking it step by step. They're very open to learn from experiences in the US. They're very open to learn from experiences in Europe. But all of that is almost not really well understood, because the way they did it in Europe, first they talked about it forever, then they set up the rules, and then they launched it. Where in China, you do a pilot project, and then you do another pilot project, you refine it, and you kind of build, you build brick by brick. And once the wall is, well, the foundation is there, then you launch it, right? So I think there's a lot of misunderstanding, in my personal opinion, about where China is at today. And I think what you just mentioned just now is extremely, extremely important, to basically say it's not a matter of whether you think China is doing a fantastic job or China is not doing a fantastic job. It's where are we at in China today? And we're a lot more advanced than we were, say, 5 years ago, but we still got a long way to go, right? So as you were saying, there's more sectors are going to be included very, very soon. But there's just something I wanted to add, because I think there's a lot of misunderstandings out there in terms of what China is doing.
Yeah, I agree with you, right? Not only that, I think if you are talking to the practitioners in China, they're probably looking at a different diagram, different changes than some of the people, some of the observers outside China. Right. I mentioned this intensity cap transition into absolute cap, the auctioning, right? And relative to what we're trying to do in Hong Kong as a member of the coalition, I keep saying it's not just about AEX holding, it's about a coalition function in Hong Kong, right? It's really probably more fundamentally as the ETS market in China mature. Now, probably you can take a second look at the fundamental principles of a cap and trade, right? So, and then that's why people like us, that's why this coalition, and what I like to say is, what I like to propose is my thinking about ETS or cap and trade is, in order for cap and trade to work, both cap and trade means efficient pricing, right? Both cap and trade needs to work simultaneously, right, in order for the whole program to function as designed, right? Right now, on the cap side, like policy changes, migration, evolution, I mentioned. Then my question as a practitioner, as a former exchange guy, is how do you make efficient trading work? Right? Because without efficient pricing of your carbon, the cap and trade is not going to work.
It's not going to work.
So for me, I have to apologize for jumping into some of the jargons, right? It's about liquidity, about institution participation. And when I said institution participation, if you look at Europe, if you look at North America, right, the REGI market, the California carbon market, it is the industry, the ecosystem. It's the compliance company and the brokers, the financial trading firms that help providing liquidity, right, that help the compliance company to lay off their price risks, right? All these people needs to come together so we have a market that's transparency, visibility, not just today, spot exchange, but over the next 12, 24, 36 months.
Right, and that's not particular to carbon. I mean, it could be any commodity trading or even equities or whatever.
It's easier said than done.
Of course.
Everybody understand that, right? Like I said, in order to have a world-class carbon market, right, you need to have a world-class infrastructure. Today,
of course,
including the regulators, the compliance company understanding risk management, right? The banks, the broker-dealers that knows how to price commodity, and energy commodity in particular, right? And you had an NGO, the journalists, the academia, the lawyers, the accountants, right? All these guys needs to come together and say, hey, these are the designs. These are the implementation process, right? These are the trading platforms, right? So when all these coalition members come together and converge, then you start having functioning markets.
And where are we now in China? Are they open to this?
Yes, I'm sure they are. As a guy that deal with these stakeholders in PRC in Hong Kong, we see people talk about it. We see people like us doing pilots in Hong Kong, right? Simulated trading with trading software developed in Zhengzhou City, right? So I think the idea is we seem to have a blueprint, right? And that's the easy part, right? If you look at CCX, CCE, Chicago Climate Futures Exchange, that 30 years ago started to price sulfur futures, right? Regulated by the CFTC, right? So we have the blueprint, the EUA, right? The California markets, the Hong Kong markets, right? China markets. So, and then it's about implementation. So my experience working with CCX and ICE is the implementation. In order for implementation to come to pass, the whole wheel, right? Everybody needs to be involved.
Moving on to Hong Kong, Jeff. Hong Kong, small place, important financial market. What's the role of Hong Kong in kind of carbon markets in general and with the Chinese carbon market specifically? And how can Hong Kong grow to have a more global presence or reputation when it comes to carbon markets?
Yeah, if you look at the FSDC, Financial Service Development Council, right? The Hong Kong FSDC published a white paper at the end of 2025. I'm a small part of that working group to produce that white paper. It calls for the internationalization of Chinese carbon markets, right? There's, I think, 4 or 5 recommendations, right? One is to leverage the financial market infrastructure in Hong Kong,
right,
and to develop a derivative market, a world-class derivative markets for the CCERs, for example, right? The other recommendation is to build a civil society-based nonprofit, transparent, with proper infrastructure and proper governance structure that's similar to, let's say, Vera or gold standards, how to process projects out of China. Or for lack of a better words, I probably want to use an easier term like ICCER, right? The international version of CCER based in Hong Kong, right? So I think 2 things, right? As a super connector between the international markets and the Chinese markets, as in the stock and bonds, green bonds, commodity, or ETF, right? Swap, all these similar version of Stock Connect. I think carbon is the same thing. It could be the same thing in terms of harmonizing standards for voluntary carbon markets with international markets. The second is pricing, trading, liquidity, price discovery, right? You have Chinese stock traded on AsiaREC Markets, and the same Chinese company listed in the Hong Kong Stock Exchange, right? Catering to different trading groups or institutional investors. I think carbon could be the same thing, right? There, as we did the CEA-CC forward simulation last August, we have trading firms, carbon trading desk in California that came to participate, to critique the contract design, to participate in the simulation in Hong Kong. Because some of these guys told me privately that they want to build an as a carbon trading firm, sizable carbon trading firm of 20 years. They want to build exposure,
of course,
to Chinese carbon via Hong Kong. They like the role Hong Kong play as a financial market, among many other things, a super connector, right? They understand the law in Hong Kong. They understand the derivative, the CCP, the central clearing, the exchange regulations. They want to build that exposure through the derivative market in Hong Kong into the carbon asset class.
I mean, China is going to be the biggest carbon market in the world by a significant mile, right? So,
yeah, well, if you're a carbon trading firm in California and you have no exposure to China via Hong Kong, what kind of carbon trading firm are you?
You're not going to go very far. You mentioned the simulation that you did in Hong Kong. Can you tell us a little bit more details about that?
Yeah, we basically got a grant from Cyberport, right? We want to test the water. Somebody told me, Jeff, nobody is going to come, right? It's so early, right? So we said, why don't we just put it up, right? And do a little bit engagement with trading firms in China, compliance company in China, and people outside China, and see what comes, right? So we talked to, as we named in the press release, right? We talked to people in California. They said, yeah, we'll come, we'll critique your contract design, we'll see who else comes, right? So we talked to the TPC, trading shipping firm in Singapore. We talked to China National Building Material, the cement guys, right? The biggest cement company probably in the world, right? They're coming to the ETS, as I just described to you, the second batch, and they have a joint venture with Mercuria. So I talked to them, so would you come? And you're a big player in the carbon market now. We're doing a forward contract simulation. They came, right? Fortune Oil, listed in Hong Kong, oil company, they came. We talked to a big gas company in Shenzhen, they came, right? And we also talked to some of the big SOEs in the chemical business, some of the biggest broker-dealers in Shanghai, in Beijing, they came. And we talked to one big generation SOE, right? They came. So I think it's a good kind of a mixture of trading firms, compliance company.
Sounds like it, yeah.
So 17, 18 traders in total, right? So we put it together. We list the 3 contracts. We test every day. We're trying to coincide with the spot market in Shanghai and this for the CEA and the spot exchange in Beijing, CCER. So we gained a lot of experiences, from the back and forth with these guys. We managed to trade several hundreds of millions of RMB notional by the end of the pilot, with a small but meaningful, I think, open interest, close to 2 million tons of carbon. So the important thing is these guys, many of these guys still trade commodity futures, right? Or have no experience of trading live markets in the past, right? So it's a good educational tool to them. We write up a report internally, we share with these people. So it's kind of a test the waters and gaining the experience, collecting feedbacks of the contract design, of the GUI, of the trading software. The non-Chinese guy may like one version of the GUI, right? And the Chinese guys would like a different version, right? And how are you going to eventually settle into a physical delivery from cash? We'll have a bit of discussion, very superficial discussion on these things, mark to market, pre-trade risk management, right? So these things are mundane to guys like you outside China or to a trading firm. But I think for them, it's a good learning experience, it's good exposure. And frankly, we can prove to the markets and hopefully to the regulators, there is enough pent-up demand to trade a real market, a well-developed, properly crafted, and well-regulated market in Hong Kong. And hopefully that confidence, right, will allow us to work more closely with the same stakeholders and more to eventually go live trading.
Just one last question about the carbon markets before we talk about your outlook. It requires an enormous amount of entities. You got to get a lot of people in the room, basically, and coordinate and make sure that they cooperate and collaborate. That's a massive, incredibly difficult job. Not because it's China, but just it's difficult in Europe. As the EU, 27 countries, and they got 400 opinions. So do you feel that because most people understand the importance and the urgency to have a properly functioning, transparent carbon market, do you see these people coming in wanting to cooperate and collaborate more willingly? Or how have you seen these kind of people coming in?
Yeah, I'm just saying more and more people understand in order for cap and trade to work, both cap and efficient pricing needs to work, right? It could be Hong Kong, it could be Shanghai, it could be Hong Kong, Shanghai, Carbon Connect. It could be a lot of people have the same skill sets and experience. So for us, working with Cyberport, obviously Cyberport has a much more power of convening, right? We're just a small potato, right? Part of the Cyberport infrastructure. So the idea is to talk to more people I wrote op-ed on China Daily. I do ESG town hall with CCTV, right? With other experts from China. So I think from what I see, frontline is more and more people understand efficient pricing of carbon, right? Is the next logical step. How eventually that would evolve, would come to pass, is the whole industry. So right? I think our strategy is talk to more people.
Right.
If eventually people come together,
right,
it become small coalition, become a larger coalition, and then once that large coalition reaches a critical tipping point, stuff happens.
Right. And you see early evidence that this convening is taking place, so people are willing to talk, people are willing to cooperate and collaborate and create these markets, basically, right?
That's why we did the pilot, right? That's why what the pilot tells us.
Proof, right?
Right. There are enough experts in Tsinghua University, and MEE, and CSRC. They all came to California in the past, came to EU, came to Brussels, came to ICE, came to AEX, right? They saw with their own eyes, right? They talked to them. So I think we're just looking at these converging of different forces, right? Different members. Right. We see these guys are what these guys are telling us, right? We see what the markets are telling us. Again, I'm just working with other big potato as a small potato, right? And when the critical mass is there, stuff happens.
You may be a small potato, but you're a very key small potato. Now, just moving on to the last question, Jeff. If we fast forward, right? So now we're 10 years from now, could be 20, whatever number you like. How do you see the Chinese and Hong Kong carbon markets? Are we still kind of evolving? Have we already surpassed the EU market in terms of size of trading? How do you see the future?
I know as a former exchange person, I like to see the size, the trading, the volume, because this is how an exchange or a trading platform makes money, right? But I think you are an impact investor. So I think at the end of the day, right, is the critical criteria of how and if an ETS works, right, is number one, you need to look at the carbon reduction. China might have picked this year the carbon emission, right? Might not, right? People are different expert externally are looking at this trajectory, the data, right? For us, the point is the ETX, like the European markets, for example, and like the California markets, like the RIGI markets in northeastern United States, are they performing the way they are designed to perform? Is the total emission on the cap going down? Yes. Is the total emission coming down without harming the economic growth? Right? You look at the EU, like California, like RIGI, it's a resounding yes, right? The same criteria, right, applied to China on a much larger, massive scale, right?
Massively bigger.
So it should be bigger. It should be the biggest, right? The market should be the biggest because it's the biggest emitter, right? But comparing size, I would like not to compare size alone. I would like to compare the impact, right? Is the goal is reached while the cost of the transition is lower, right? That's why people like us in the financial sector, that's our reason for being, right?
Of course.
To implement the policy so these economic growth and the job growth, right? And the transition happens on that historical scale, it happens at a lower cost.
Great. Last question, which is the light-hearted question. Do you have any personal recommendations? I mean, it could be books, reports, films, documentaries, or anything else for our listeners.
Yeah, the president of the United States a few weeks ago was in Beijing. First time the U.S. president made a trip to China in 9 years. So geopolitics, right, is something always trends. Social TikTok in China. I mean, Douyin in China, right? So probably I should recommend one of my all-time favorite geopolitics book, nonfiction, a book called The Great Game by Peter Hopkirk. The book was published in 1990, 25 years ago, right? It is the definitive nonfiction history book about the rivalry in Central Asia between the British Empire and the Russian Empire. Right? So it has tons of juicy stuff about military maneuver, so secret missions, diplomatic missions, and political intrigue, right? So if you like history, geopolitics, great power politics, rivalry, what happened 100 years ago in Central Asia, it's a fun book. It's very detailed.
I'll definitely put that on my reading list. Jeff, I really want to thank you for participating in the Asia Climate Finance podcast, and thank you so much for your time.
Thank you, Joe. It's always nice to see you in person again.
Thank you.
Please note that the Asia Climate Finance podcast is provided for educational purposes only and does not constitute investment advice. Any information discussed should not be relied upon for making investment decisions. Listeners should always seek advice from a suitably qualified and authorized investment professional. The views and opinions expressed by guests are their own and do not necessarily reflect the views of their current or former employers or of the podcast host or producers.